All right. Oh my god, there's just so many problems today, man. Fuck. Answer the phone.
Hello?
Hey man, on the YouTube, so what I've done in the past is like I go to the T3 Live YouTube and then I'm able to click on it and then go to the videos, but now it's not, when I go to like other accounts or switch account or whatever, it's not showing up.
You're not already signed into T3?
No, it says my channel, Derrick Oldensmith right now.
Alright, and then do switch accounts and then add new account, I guess, if it's not showing up?
Yeah, so that's where I need your help. So add new accounts. I don't know why it stopped showing up all of a sudden. Media manager at T3Live.com.
Yeah.
What's the password?
I'll send it to you. It's T3,
Hold on. What is it? Lowercase or lowercase? Hold on. T3. Okay. Trying to sign in here. Oh boy, cutting things. I'm having a day today. All right, and then I go on to videos and live. Okay, thanks a lot, man. Just give me 1 second for anyone who's here right now. Okay. Let's get it started. Okay, so welcome everyone to this week's webinar. Let's go live. So I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. So just real quick, I'm having an issue technology-wise on my end, and I sincerely apologize. If you hear a buzzing about an hour before the webinar, my computer here really went on the fritz and started making a very loud, consistent buzzing noise. So I apologize for that in advance. I'm just going to push through it. I don't think it's too bad on your guys' end, but if you do hear a little bit of a buzzing, that's a tech issue that I'm having, which hopefully I'll have resolved by next week. So I appreciate everybody's understanding, and again, I apologize. So I got some positions on right now. I actually have a lot less positions on than I typically do, just kind of given what the market has done over the course of the last 2 weeks. Really paired out of a lot of the long positions I had into that up move. And then got fairly heavy to the short side at one point last week, and covered a lot of that as well when the down move finally came in. So not as many positions on as I typically do. So a little bit about me. I have been trading professionally since 2008. I actually joined T3 in 2010, so I've been with the firm for a little over 10 years now. Currently working with a group of well in excess of 50 traders on a day-to-day basis. I've mentored probably hundreds of traders at this point for the firm over the course of the last 7 years that I've been running one of T3's trading desks. Currently at this point, I'm running T3's headquarter Manhattan office trading floor when we're able to be open. Unfortunately, we haven't been able to be open for the last few months because of the virus situation, but our transition to getting everybody out of the office and having them trade remotely has been pretty flawless, just because a large percent of our traders were remote already to begin with. We already have all the infrastructure in place to get everybody trading remotely. The virtual trading floor has been on fire recently with all my professional traders using it on a day-to-day basis. So today I'm mainly going to be talking about markets and some of the trading that we've done recently. We are currently bringing on people into our proprietary trading group. We also have retail accounts available as well. There's a lot of advantages to professional proprietary trading. I'm going to talk about that a little bit after I go through some charts. And there are also advantages to our retail trading accounts that you can't necessarily get in a typical E-Trade or TD account or anything like that. So here's my email address. Feel free to reach out to me about anything really, and either myself or a member of my team will get back to you shortly after. I'm also running a Pro Trader Boot Camp this summer. I believe it is slated for the last week of June. Sign up. It's going to be awesome. I'm going to be teaching a lot of stuff, a lot of different courses that are a lot of the similar information that I teach to my professional traders that I work with. It's going to start with some basic stuff in the beginning, and pretty quickly by the end of the week it'll be much more advanced. So come see what being a professional trader is like. Come get some of the education that's given to my pro traders. Take the Pro Trader Boot Camp that's going to be at the end of this month. All right, let's go to the charts. Okay, so let's start with the S&P. So really what I want to talk about is this run up here in the market that we experienced into the beginning of last week, followed by the heavy sell-off that we had particularly Thursday and Friday of last week. And I want to talk about how I was able to really capture this down move. My team and I, we did a great job recognizing that this was coming. And there's a very, very, very powerful chart pattern here that you don't see very much. And when you couple an understanding of the technicals with an understanding of fund positioning and general fundamentals, you can capture some really powerful moves. So we had identified, actually going back to this day here, May 18th was the first day that we really noticed it. So up until then, there had been a very strong comeback rally in the market following the low in March from the coronavirus. And then here in mid-May, there was a very slight pullback in the S&P, followed by a big gap up and subsequent melt higher as the market got above the 200 simple moving average. It's my yellow line here. Broke through levels of resistance and really astounded even some of the best market participants that are out there. Stanley Druckenmiller, Paul Tudor Jones come to mind. They've both come out recently last week and said that they were absolutely humbled by the extent that the market was able to bounce. I believe that this rally in the S&P from the low here in March to the high about a week ago is about a 44% rally or so. That's, if you consider that on a typical year on average, the market goes up 7%. To see 44% move in a couple of months after one of the biggest crises that we've ever seen as a people in America and in the world, it was really impressive. But this whole last leg of the rally showed some significantly unhealthy signs, in my opinion. We were really able to identify, again, specifically starting on this day, on May 18th, that this last leg of the rally seemed more like a short squeeze rally than actual new money, new longs coming into the marketplace. And the main sign there, well, one, fund positioning is public information. So we knew that the long-short funds out there were on the wrong side of the vast majority of this rally. They were shorting early. They probably were, flipping to the short side in aggregate here in late March, and then just suffering all through April, getting a glimmer of hope when we, found some resistance here in late April, beginning of May, and then right here after this gap up, that's the beginning of a massive short squeeze. And the way that we were able to really tell that is because of the names that led this rally. So the equities that led this initial rally was mainly big tech. Strong, healthy companies, amazing balance sheets, companies that, if anything, actually stand to benefit from this entire scenario. Amazon is a great example. People aren't going to retail stores anymore. They're buying everything on Amazon. You don't even have the option to go to a retail store, even if you wanted to. Not to mention that you're exposing yourself to harm and potentially to the virus if you go to a retail store. So it made sense that the big, healthy tech names were leading this initial rally. And then starting here in mid-May, that switched. Tech started to take a bit of a break. Obviously, they did continue to go higher. But what we really saw, massive short squeezes coming in, or what appear to be short squeezes in airlines, industrials, cruises, hotels, all the names that are extremely weak as a result of the crisis. I'm seeing American Airlines up 40% in a day and then gapping up 40% the next day. That has all the signs of a short squeeze on it. And then that really kind of continued here, culminating a week ago Friday with a jobs report that was much better than expected. And that led to a large gap up and a very high volume trading session as shorts continued to get squeezed. What was interesting to see and had me a little bit nervous because I started really, coming in on the short side in this area was Monday, Tuesday of last week. On these 2 days here, we actually saw what appeared to be new money rotating into the market back into tech, and tech was taking that leadership position again. But this all ended when the Fed announcement occurred on Wednesday. To be fair, the Fed said everything right last Wednesday. They perfectly met the market's expectation. They said, we're keeping interest rates low until 2022. We're going to be as accommodative as possible. And with that, after an initial pop, it was a sell the news event. So why were they selling the news when the Fed appeared to meet expectations? It's because of how strong the rally was into that move. We see this in earnings season a lot, and this is something that new traders struggle with. In earnings season, you'll see a company, it beats on earnings, it beats on revenue, it guides higher, all the numbers look fantastic, and then it sells off all day. And if you're a newer trader and you've never seen that phenomenon occur before, you might come in and buy the stock just thinking, hey, it beat on earnings, numbers look good, it should go higher. So why would it, or why could it, potentially sell off all day in that scenario? Well, sometimes expectations were so big that there was a big run into it, and then if they didn't, beating expectations wasn't enough. They had to massively beat expectations. And if they don't massively beat expectations, that sell-off occurs. So the Fed met the market's expectation. There was an initial pop on it, and then we closed weak that day. We continued to sell off very heavily after hours, gap down, sold off even heavily pre-market the next day, and then Thursday was this big down day. I think the Russell 2000 was down 7% on Thursday last week. The S&P was down 5%, something like that. So it was the biggest down day that we've seen in a while, really since the coronavirus whole situation came in to begin with. So how did my team and I capture that? Well, first of all, we could tell that this last leg of the rally was what I refer to as unhealthy. It was primarily short squeeze driven. So what do you need to do? You need to be able to take a half step back, be patient, because you don't want to jump in front of a train of buying, of short squeeze buying that's coming into the market. Sit back, be patient, and let the market tell you that it's time to execute that short, because it looks like the funds are mostly unwinding theirs, right? So, very generally, you might even see this in your own trading. If you see like a stock shake out an important level, it makes it much easier for it to go in the opposite direction. So, in other words, if the shorts all had to buy out of this market, they all got squeezed out, it can actually make markets go down much more easily, because they're not going to be on the bid to cover anymore. They're all out. And if anything, they might be forced to re-short the market, beating themselves up. Oh boy, I can't believe I got out of my short position right at the top, and now the market's going down. They re-enter. So that creates for a supply and demand dynamic where you have a lot of selling that can come in, new shorts having to re-enter the market, but no one buying, no one covering. And we were able to capture this ahead of time, shorting the Fed announcement, shorting ahead of the Fed announcement. And then on Thursday morning, even into this big gap down, there was still an incredible shorting opportunity. And here we can go to our technicals. This right here, this 4 days of price action, is a very powerful, important technical pattern in the market that you actually don't see too often. This is referred to as an island top. Island tops actually tend to occur in more euphoric markets, which, S&P up 44% in a couple months, you're looking at a pretty euphoric market. And on top of that, heavy volume from Friday's price action. So what is an island top? An island top is a period of price action, 1 to several days, in this case it was 4 days, surrounded by gaps on both sides. So you can see on this day there was the large gap up. That was a result of the employment number that came out on that Friday. And then on this day there was a very large gap down, as is really, they're blaming it on an increase in coronavirus. So there's the potential of a second wave. But in reality, even though there is some truth to that, it's this concept of fund positioning. They got all the funds out of the shorts. They sold the Fed. Coronavirus started to pick up at exactly the same time, and that led to this massive down move that day. And the island top pattern is so powerful because anyone who bought stock in these 4 days is wrong. If you bought stock to go long on any of these 4 days, and now the market's gapping down to here, you're in a bad spot. You are losing money. And what do people do when they're losing money? If they're smart, they'll sell and manage their risk. and other people, they hope and pray that their position comes back. You're better off doing the first one. Manage risk. The hoping and praying, unfortunately, does not work in trading. So we know that anyone who bought the market here, whether you were short getting squeezed out or you were a long enter in the market, when this gap down occurs, you're in a really bad spot. And especially because that Friday had such high volume. We know there was a lot of buying that occurred in this 4-day period of time. And now they all have to puke that stock out on this Thursday. So even into this huge gap down, it led for great momentum shorts to the downside to be able to take advantage of that. If anything, it exceeded my expectations on just how much we could go down. Where immediately, in one day, we went from basically SPY 320 to SPY 300. Big move. Next morning, we gapped up. We were able to hit that gap again to be able to have another nice move to even break the previous day's low, and then gap down again. So yesterday was also a really interesting day. I mean, I love the volatility. I got to tell you, I love the volatility. I was getting a little bit frustrated into the end of May and beginning of June just because the volatility died down. I want this price action that's going on over here in March. Why? Volatility is a trader's friend. Volatility is opportunity. Volatility puts us in the position to be able to make money. We need price action, right? A professional trader wants volatility or direction from the market, or ideally a combination of both. Volatility creates great day trading opportunity. So that's what we want. We want that volatility. And then, so we gapped down really big yesterday, and we had an impressive rally. We can go to a 5-minute chart to show yesterday. We can go back even a little bit further, right? So this was the big down day that I'm referencing, followed by a gap up and sell-off, which we did really well on, followed by a gap down yesterday that got bought up. This initial buying up of this gap down makes sense if you understand gap dynamics. This is a common gap. Common gaps tend to get filled, so that common gap did get filled. It honestly overshot my expectations to the upside by a little bit, but once that common gap basically got filled, they overshot it a little bit. We saw these higher volume little dojis come in. So I'm like, okay, great. Right here. Time to hit the short button again. Time to reload. And just as that trade was starting to work out to the downside, what happened? News. Look at this volume that came in at 2 o'clock yesterday. That is when the Fed Chairman Jerome Powell came out and he said his expectations to start corporate bond purchasing. Well, that's more stimulus, and guess what? The market loves easing, the market loves stimulus, and there was a huge rally that came in there. So, unfortunately, this is just part of trading. Trading is all about probability. There's no such thing as 100% success in trading. So, just as I'm really starting to hammer, the shorts again based on this scenario, and things are looking good, it's starting to move in my favor, news comes out. And when news comes out, sometimes it's for you, sometimes it's against you. A lot of times you don't know it's going to come out, it just happens. And you could be positioning yourself perfectly in the market based on what the technicals are telling you, doing everything right, and all of a sudden news happens in the other direction and pushes you out. So that's basically what happened. Strong news comes out, the Fed's going to continue corporate bond buying, and then that led to a very strong close. And that yesterday honestly changed the dynamic of the market again. And today's strong gap up based on that makes a lot of sense. The Fed, the fiscal government, they're doing everything that they possibly can to support the economy and support the stock market. So we had that strong rally, and that was followed by this morning more good news. More good news. So we got the Fed coming in, bond buying. We got the government coming out saying that they're looking at a potential $1 trillion package for infrastructure. That's jobs. It's outdoor jobs too. So those are good jobs to have even in a pandemic situation. And then on top of that, at 8:30 this morning, we got an excellent retail number. The U.S. economy is based on a combination of a strong consumer and a strong services sector. And the coronavirus, unfortunately, really did a number on one of those important factors there, which is the consumer. And now we got a really strong retail number on top of it today. This morning's gap up was incredible. We actually filled this gap again with another gap almost. The IWM, the Russell 2000, totally gapped all the way up here again. Filling this gap on both sides with gaps. It's really been an incredible market. The volatility has been awesome, and the extent of the gap up made this morning's game plan honestly a little bit tricky. My original thought process was while we're below like 310 to 312 in the SPYs, I probably want to lean to the short side. But if we get up above 312, meaning getting up above this high and into that gap, gaps tend to get filled in those scenarios. There's no price action left. There's no price memory. Price memory is a really important concept and a really important theme in trading that everyone should be aware of and understand. That we could trade in that gap very easily. But by the time the market opened, it was almost gone. We're up here at I think at one point we got to 317 pre-market. Really, really impressive. So all pre-market, the idea went from, all right, well, maybe we should be shorting a gap into 312 to, oh, man, we're gapping above 312. We should probably be going long to, oh, boy, we are gapping up so big into the next level of resistance that we got to be thinking short again. So that was kind of the idea for this morning. Shorting again off the open. It was difficult. It was a little bit painful, especially as the market was kind of breaking highs here around 10:30 or so. There was no volume confirmation on it. This was really looking like a time correction. This time correction is also really bullish. And then guess what? Jerome Powell speaks again, and the whole market sells off once more. And I still got to catch up on my research and everything to figure out exactly what happened today, because I was having these technical issues with my computer all of a sudden today and had to do this webinar for everybody. And this rollover here was incredible. The gap got totally filled. We went all the way back down to 307.50 on that. Very high volume hammer. Solid bounce back off there. The 15-minute chart is probably more important than the 5-minute chart this time of the day. We just put in another little shooting star here a little bit ago, and now we'll see what happens here the rest of the day. And today's close is going to be really important with all the news. Market feels a little bit confused right here. So the whole point is, really what I wanted to go over, and obviously I love talking about markets, so I can just keep going and going and going, and I could talk about markets all day, and that's why I continued into today. What I really wanted to highlight was this trade in here, and how and why my team and I were able to be all over that and crush it. And it was a combination of understanding fund positioning. If you can understand what people are most likely going to do, well, that's like winning the lotto, right? How do you understand what people are most likely going to do? By understanding how people are already positioned. And then it's just about understanding incentives. I think Charlie Munger said that if you can understand someone's incentives, you can understand what they're going to do next. And that is what trading and technical analysis honestly is all about. It's about understanding the positioning of the participants who are currently in the market. We talk about it as technical analysis because a lot of the times when we're trying to understand that positioning, it's through a lens of the charts of what has gone on previously. But there's more information than just the charts. Even though charts are great, I'm a big technical analyst myself. So just understanding that fund positioning, we knew that people were trapped because of this island top, that really important, somewhat rare technical pattern that comes in, combined again with just our internal research as professional traders, how our funds positioned. We talk about this in our morning meeting every day, our afternoon meeting every day with our team. This momentum short in here was phenomenal. I came into it short. So, really, really strong day for me. And now we'll see. This market right now as we're having this conversation is battling for this 312. And this 312, I think, has established itself as an important level based on this gap. So that's the market. Really just wanted to do a big update. This is the stuff that I am talking about every day with my team of professional traders. Every morning, we do a morning meeting at 9 a.m. Eastern before the market opens. We do an afternoon meeting at 4:15 p.m. The morning meeting is primarily about idea and information sharing. In that morning meeting, I'm talking about my expectations. What do the Asian European markets do? How are the American market futures set up? What type of gap are we dealing with this morning? Gap analysis is a really important part to my trading. And what are my expectations? And based on those expectations, we formulate as a team a game plan. And just because, every trader is always able to make their own choices and their own decisions, but by sharing all of this information, we can collectively put our brains together and help each other to succeed. So that's the morning meeting. The afternoon meeting is obviously a review. It's a review of what markets have done. But in that afternoon meeting, in that review, what I'm very specifically attempting to do is I want to draw out lessons from what the market did that day, from the market, from the individual companies that we're involved in, and I can take those lessons, and that can be something that is real-time scenarios that my team and I can learn from every day. And then questions in the ProDesk virtual trading floor room are always heavily encouraged throughout the entire trading session, in the morning meeting, in the afternoon meeting. I just want traders to be successful. I want them to learn as much as possible and put themselves in the best position for success. So we've got the morning meeting, the afternoon meeting going on every day. That's where a lot of our information comes from. There's also training programs for when traders first get started. So, T3 Trading Group is one of the largest, if not the largest, proprietary trading companies in the United States. We have over 500 licensed professional accounts. We have our headquarter office is Manhattan. That's where I'm typically working out of, as long as they're not in the middle of a global pandemic. But we have an Atlanta, Georgia office, a Boca Raton office, a couple in New Jersey, another smaller one, I think, in New York City. And even before the pandemic, probably 60+% of our traders were remote-based traders. And right now, everybody is. And for the most part, transitioning everyone to remote was very seamless. Just because we already have that infrastructure in place. We got the virtual trading floor room. All you need is a computer, Windows-based computer, I should say that, a Windows-based computer, internet, and you could do this business from wherever you want. My wife and I are actually looking at Airbnbs in Montana right now. We figure we got at least a month before the office can open, probably 2 months before the office can open. I can trade from anywhere. I've traded from places all around the world. So I'm looking at Montana, Idaho, Wyoming, and we might do a quick 35-hour drive from New York to one of those places over an upcoming weekend to get out there and work from there. Take advantage of life as best we can. That's all the benefits of being a professional trader for a living. So T3 Trading Group is an SEC broker-dealer and member of FINRA SIPC. All of our traders have to be professionally licensed with an SIE and Series 57 exam. You have to pass a background check as well as part of the registration process. We provide study materials for all of our incoming traders for these exams, STC study program, textbook, online classes, online practice tests, everything that you need. And then once the exams are passed, we can get you trading. Typically what I do is I start by providing a demo account for the first week or two so traders can get used to the software. Our professional traders have 4 different software options: Lightspeed, Fusion, Sterling Trader Pro, and Wex or Wolverine. On our retail side, we have retail accounts as well. We just have Sterling Trader Pro and Fusion available on the retail side. Our retail advantage is direct market access and an excellent borrow list at a low cost. I've spoken about this extensively in the past, but most of the brokers out there, Robinhood, TD, E-Trade, Schwab, they're selling out your orders to HFT firms. It might sound like it's commission-free. In my opinion, it's extremely expensive to trade through them because they're front-running all of your orders, and there's probably an internal commission cost of somewhere between $10 to $20 per thousand. As a retail trader with us, as a professional trader with us, you get direct market access. There's a lot of benefits to that. I actually teach a big class on understanding routing and tape reading to my traders as they get onboarded with us. We have equities, futures, and options. I would say that T3 is primarily an equity-based firm, but we do have equity options as well, and futures. Taking care of my traders is really important to me. It's important to me. It's important for my reputation. It's important for T3. I just want traders to be successful, and I do everything I can to be able to get them there. So, the morning meeting, the afternoon meeting, even this webinar right now is probably costing me a lot of money with my trading. But if it brings on one extra really strong candidate to my team, and that strong candidate becomes really successful and starts to feed me ideas that make me money, it becomes worthwhile to me in the long run. I just love working with traders. I love teaching. I've been teaching martial arts since I was 15 years old. So I've been teaching for 20 years now, and I've been teaching trading for over 7 years at this point. So it's something that I enjoy, mentoring traders, training them, doing that morning and afternoon meeting. So if you join us, you're not going to go it alone, that's for sure. On the prop side, there are capital requirements in order to trade from us. So you have to contribute a capital contribution. We basically start by providing buying power at 20 times your contribution for intraday trading, 8 times your contribution for overnight positions, and then you're paid out based on a percentage of your performance as a trader. So if you came to the firm with $50,000 as a capital contribution, we basically give you $1 million to work with. Risk management becomes really important when you have access to that type of capital, so I spend a lot of time focused on and talking about risk management. I tell my traders probably 80% of what I do as a trader is about managing risk, and 20% of what I do as a trader is about maximizing reward. And all the training and education, everything I provide, if you're a professional trader with me, it's free. If you're not interested in becoming a professional trader because I don't know why you wouldn't be, but maybe you don't want to do the licensing requirement or something like that, you can actually still pay and join the ProDesk VTF at this point, or potentially pay for access to some of my training as well, which just can help you, in your own life. Everyone has to manage money in their lifetime inherently, just by being a human being, unless you're a hermit somewhere in the mountains of Montana, which is sort of what I'm trying to be, except trading with money at the same time. The lessons that you can learn by being involved and learning about trading and learning about money management are things that you can apply to all aspects of your life. And for experienced traders, really we primarily cater in a lot of ways to big experienced traders. T3 is a very well capitalized company. Because of our level of capitalization, we can work with traders of basically all sizes. If there's traders who want to come in and have $1 million accounts with us, it's no problem. We can work with you. So reach out to me. Again, my email address is going to be posted at the end. So if you're interested in opening up a retail account or joining the proprietary trading group, reach out to me, and either myself or a member of my team will get back to you. You're going to get a lot of other free programs. You're going to get the ProDesk VTF room. That's my room, which includes my morning and afternoon meeting each day. You're going to get access to the Red Dog, Scott Redler, at the Trader Hub. You're going to get Red Dog's All Access also. Scott's awesome. I really would credit Scott with a lot of my own success. I used to watch his morning call and daily recap videos every day religiously for years. So Scott's a phenomenal trader as well, and you're going to get access to both of us. When there's no virus scenario going on, Scott and I basically run the Manhattan office trading floor together. And once again, I said this in the beginning, the Pro Trader Boot Camp at the end of June. Click below the video for more details. You're going to get access to all the stuff that I'm talking about for a period of time, plus my training. The same training that I give to my professional traders, you're going to get access to. We're going to be doing multiple classes a day. Hopefully the market's slow that week, so it doesn't cost me too much money to be working with other people instead of focusing on my own trading. But no matter what, I'll be there for you guys. It's going to be phenomenal, so don't miss it. So once again, if you're interested in any of the things that we talked about today, trading professionally as a prop trader, first and foremost, reach out to me. There's my email address. If you are tired of the robots at TD and E-Trade front-running your orders, costing you a ton of money, you might not even realize it, they're costing you a ton of money, email me. We can set you up with a retail account through T3 that's got direct market access. You want education, you want to be in the VTF room, the ProDesk room, the morning meeting, the afternoon meeting, all of our ideas of myself and my team. If you want to know how to catch that down move that we caught on Thursday, email me. I'll set you up with the T3 Live folks that can get you access to the VTF room. You want access to my training, you want access to my boot camp, whatever it is, email me. We'll take care of you. I'm a little fired up today. Market's been a little crazy. Email me. Thank you very much. I'm going to get back to trading. It's been a pleasure, like always, to reach out to you guys. Actually, I guess real quick, if anybody has any questions, I'm also happy to take them, even though I'm itching to get back to the markets right now. So if you have any questions, feel free to post them here in the YouTube chat, and I'm happy to go through them. So, common question. So for the training program that I give for my pro traders, it basically consists of a series of lectures. It starts with basics of technical analysis, level 2 functionality, how to do proper morning research, and then we get more advanced into game planning, risk management, how to trade IPOs and secondaries, tape reading, understanding routing. So the training program that I give to my pros is basically it's a different lesson each day that you get access to, and the idea is you want to take the lesson of the day and then apply it into the next day's trading so that you become a bigger, better, more successful trader. Unfortunately, you have to have U.S. work authorization in order to work with us. So you either have to be a U.S. citizen, or you have to have a green card or OPT or some sort of visa in order to be able to join the company. So if you're internationally based, unfortunately, we would not be able to work with you on the T3 trading group side. The T3 live side, we can. So you can still get access to the VTF room. You can still get access to some of the education. You just can't actually physically open an account with us if you're a foreign trader. Cool. What else? Anyone else have anything for me today? Okay. I guess that covers it. Yep, no problem, Will. I guess that covers it. I'm going to get back to my trading. Again, I'm a little fired up today just because this market has been insane lately, and I appreciate everyone joining me. Reach out to me. Again, here's my email address. Reach out to me if you're interested in any of the stuff that we spoke about, and hopefully you guys can try to take what I was just talking about with the markets and apply some of that information to your own trading so that you can be a better and more successful trader.